Good afternoon, everyone. Today's Friday, the 27th of April, 2012, and this is Brian Shannon from Alphatrends.net. Let's take a look at these markets here. Pretty impressive week. Actually, let's pull the numbers up here. And while I just pulled that up by accident, I did want to mention that this program is brought to you each Friday by Realtick. Realtick's the charting platform and analysis tool that I use and trading platform, actually, for these videos and for my trading as well. So the markets this week experienced a real strong comeback after looking a little bit questionable on Monday. You can see for the week the SPY was up 1.7%, NASDAQ 2.3%, Russell 2000 recovered nicely back up through that 81 level and it was up close to 3%. So again, a pretty impressive week for the markets overall. And we look at the chart levels here, we can see that, last week we were talking about this being a key support level at about 135.80. Well, we didn't break below that. In fact, we made a slightly higher low on that gap Monday. And then, of course, after Apple reported earnings, buyers became enthusiastic basically for pretty much everything. And we were able to get up through that 139 to 139.5 level that was some prior support and resistance as well. So next week we'll want to see at least hold above 139.5 if we get a pullback of any meaningful of any significance. So really 139.25 to 139.5, somewhere in there. We've got a rising 5-day moving average now, and we were up basically 4 days in a row. But for the week, obviously the lows were put in for the first half hour on Monday, and then it was up from there. The volume weighted average price this week was at 138.5. So we're about 2 points higher than the average price paid for the week, and I would think that we were due for a little bit of a pullback. I was saying that on Wednesday and Thursday as well to subscribers, saying I thought that it seemed as though maybe we would digest these gains a little bit and pull back, but we didn't want to trade off of that opinion because it's just an opinion. Instead, we wanted to say, okay, well, let's monitor. As long as we continue to make higher highs and higher lows, will remain optimistic, but thinking that perhaps we would need a pullback. But that pullback never came. That was just the thesis we were operating under or aware of, that if it pulled back, that the 139 to 139.5 should have been support, and we'll see if it does last week. But we got back above that 50-day moving average. We also got back above that 20-day moving average in the prior support. So 139, 139.5 right in there is going to be an important level to watch next week. The NASDAQ, for its part, was up, as we know, a couple percent here this week as well. It was up 2.3% for the week and recovered nicely after a little shakeout below that 65 level. And this again shows that it's not where the market is so much in relation to the 50-day moving average, but what's the direction of the 50-day moving average. I did not expect the market to recover as sharply as this did, but it once again shows that really innocent till proven guilty is the way we want to look at a market with a rising 50-day moving average, and guilty till proven innocent with a declining 50-day moving average, because the buyers usually do come back in. Although it didn't look like it, there was no evidence that it should have been bought here. Basically, on Monday, I didn't think there was any real reason to be a buyer. Actually, I guess that was Tuesday, as this market looked like it was declining, but then Apple came in and pretty much saved the day. So what we'll be looking for next week is 66 to 66.5 to be the support that hopefully will hold if we get a pullback. And it would be nice to see a pullback actually down towards that level. And by the way, I keep talking about subscribers. I think that most of you realize I do have a premium subscription service. A lot of people watch this just on YouTube, but if you do go to Alphatrends.net, there is the first sale ever, and this is the last time you're going to hear it too, because the sale ends on Monday, and that is for an annual subscription for $399. You get a chat room that's live every trading day, a midday video update, end of day video every day with new trading ideas. So go to Alphatrends, and the normal price is $7.99. Here's really the only time it's ever been on sale. Back to the Nasdaq though, we've got a little bit of potential for resistance at about this 67.5 level. So you can see it's not so much that a lot of volume was traded there, but it's been a battleground that's been fought in the last month or so, and a little pullback would be a nice thing actually. See it pull back down towards that 50-day moving average and the $66 level. The Russell 2000, as we know, has been in this bigger range, which is basically defined by about 78 up to approximately 84, and that midpoint of the range has been really heavily contested. That is the 81 level. We've had some pretty violent moves above and below that level, and this week, well, last week we saw it got rejected at 81 even, then $80.99. We came down and held the lows from the last couple months in here, and then we're able to get back above that $81 level. So 81, we were looking at it as really a range of 81 to 81 and a half, and that's where we're going to want to see this market hold if it pulls back next week. Really, 81 and a half would be ideal, and we're going to see that 5-day moving average rising up to meet price as well. But we're still range bound in the Russell 2000, and this is just, again, I've got this trend line on here to make the point that we made back here on this day and subsequently. That is that breaking a trend line does not mean a reversal. It means maybe distribution or more correction through time. If we break down below the 78-ish area here in the next couple of weeks, then I think we could be in for some deeper profit taking in the Russell 2000. We got down and tested the 100-day moving average, but as a subscriber had pointed out, next week is beginning of May. Last year, the May 2nd, I believe, was the high for the year, and the phrase of sell in May and go away was certainly something that rang true last year, and it's just one of those little sayings that is interesting to note, but I wouldn't be expecting the market to peak just because of that. The semiconductors came down close to and held above that $33 level. It's back to the 20 and 50-day moving average right now, and a nice recovery. It had the potential to rally up, create a lower high, and then break down further. Instead, the buyers remained in control. They got it back above that 34 level, and I think that 34 and a quarter really would be about as low as we would want to see this go next week. We'll get that 5-day moving average to rise up and meet it, but 35 and a quarter, this has been an important area. We're at this little trend line. We've gotten a little bit extended here, you could argue. So a pullback to 34 and a quarter would actually be a nice thing to see, build a little bit more energy, and this is kind of still more neutral. Let's talk about Apple for a minute, because Apple, as we know, reported earnings. I put that video up the day prior to, that is, I put the video up, I guess, on this day, and I was talking about how it would be nice to see Apple pull back down towards really 548 was 550 is what I was thinking. It got down to 555, so didn't quite make it down there. But Apple's another great example of closing below the 50-day moving average is not bearish by itself. The direction of the 50-day moving average was still higher, and it trapped a lot of people in there. And obviously, the market rallied. Actually, it gapped up, and here's the 3-day volume-weighted average price for Apple. So that is basically since the event, the average price has been 608. So since they reported earnings, the average price has been 608. So the average participant is down a little less than 1% on that. That's not a big deal, but this is about the area we expected that it would encounter some trouble up near about 600. I think that Apple probably should continue to move higher. Maybe it needs to digest in here a little bit for the next week or two, but back up through 620. Apple's still in a great uptrend, and you just skim the headlines. It's easy to see how powerful the earnings power and the sales are for Apple. So definitely continue to keep an eye on that, because it's a good stock to trade, as well as it influences heavily what the market and the Nasdaq in particular are going to do. The financials, as we know, they tested tested the low end of the range. They broke slightly below that $15 level, but that was pretty much the low for the week as it opened, close to that low, which I think was 92 cents for the week. But it bounced very strong. It continued to rally up. These are some comments I was making about it, is basically that this is the prior level of support. We're basically in that area right now. Ideally, we'd like to see the financials pull back maybe towards 1540, then build some power to push past the 1560 level. Another market here that's kind of run into a little bit of resistance. We're back above the 20 and the 50-day moving average, and the market just remains very impressive here, no matter what you're trading. So I think the theme for next week would be, in all of these markets, a slight pullback that would hopefully hold above the rising 5-day moving average, and then from there we can build and continue higher. I hope everyone has a good weekend, and go to alphatrends.net and take advantage of that sale. Thanks.